Move further to our 11th, declare dividend. When dividend is declared, dividend is a part of shareholder equity account. So we declared and paid means cash is negative 2100 and dividend stockholder equity is also negative because we pay dividend. This equation is now balance. And what are the journal entries? Cash account decrease, it means this is credit. Remember, we have two exceptions for regarding stockholder equity. One is expense and one is dividend. When dividend increase, debit. When dividend decrease, credit. So what is the entry here? Entry is, we're gonna write it, dividend to cash 2100, right? So we write it down the dividend account. It is debited 2100, and since cash is on credit side, so we just write it 2100 on 11th transaction. So let's see the solution. Right? Okay, so this is the summary of all the accounts of the business. So after posting, you balance it out. And where this 33,300 came from? It means the cash side, debit side is 33,300 greater than the credit side. Right? This is how we write down the balance. Which side is greater? We write down the balance. So cash debit side is debit balance is greater 33,300. Similarly, account receivable right side, which is debit side, is greater. Supplies right side is greater. Land right side is greater. How much? 18,000. Account payable left side, which is credit side, is greater. You just less, where is 1800 came from? 3700 minus 1900. Answer is 1800, right? So it means left side, which is right side, which is credit side, is 1800 greater than right side. This is how we use or how we write the balance, so that whenever you look down the balance, okay, this is debit balance, it means dividend has a debit balance or increased balance here right now. Cash balance, we have a debit balance, it means we have this much cash in our account right now. We have this much number that we need to collect from our account receivable customers. Supplies, so this worth 3700 worth of supplies we have. Land, now the land value is 18,000 right now. This is how we write the balance, right? Salary is 1200, utilities 400, revenue account is credit account 10,000, it means this much amount of goods we already sold, right? Expense, this much 1100 expense, rent expense we already. So did you notice something? That is, this is a big account here, expense, and now there is small t accounts here, right? So it means, so it is how we write down in a way of accounting equation, and under accounting equation we write down the assets like that. Accounts payable, this liability categories. If we have long-term liability here or notes payable, so we make a small notes payable here. Notes payable. If we have long-term debt, we can just say the long-term debt, right? So this is common stock, dividend. This is a part of shareholder equity. This is a part of accounts payable, and this is the part of assets. So we write in a way that it depicts the accounting equation: assets is equal to liabilities plus owners equity. I just mentioned all in our previous accounts after posting the ledger. If you want to make the assets equal to liabilities plus owners equity, so all the assets we have just write it down here: cash, accounts receivable, supplies, and land. and then we write it down liabilities over there, and then the stockholder equity account. Why there is expense? Because this is expense in a bigger sense, and then sub accounts include rent, salaries, and utilities. Okay, I just want you to pause the video and try to solve it by yourself. At the end, we match the answer. Okay, let's start. Architect Wendy Lim purchased supplies on account for 5,000. Later, Wendy paid 1,400 on account. So generalize the two transactions on the books of Wendy Lim, architect. So let's talk about that. We have two transactions here. One is purchase supplies on account, and then later on Wendy paid 1,400. So when he purchased on account, which account is going to be affected? Supplies and accounts payable, right? So when purchased, which means supply increase, when we create the liability increase, account payable increase. So supplies increase, supplies assets, asset increase, debit, liability increase, credit. So how are we gonna write the journal entry? Debit to credit. It means supplies to account payable, which is 5,000, right? The next one is when he paid 1,400 on account. He paid 1,400, which means which account's gonna hit? Cash on account and account payable. So when you pay, cash is decreased, and when you pay to the accounts payable, the previous balance decrease, which means it's also decreased. So cash decrease mean credit, and account payable decrease mean debit. So how we write down our entry? Debit to credit means accounts payable to cash 1,400, right? So let's match our answer, right? Okay, how are we gonna post this into our T account or ledger? So you make, here are three accounts, or here supplies, accounts payable, and cash. So you make a T account here and write it down. Just post the information here. Supplies, first debit 5,000, and then account payable credit 5,000, accounts payable debit 1,400, cash is credit 1,400, right? And if you want to balance it out, the balance is like that. Which side is greater? This side. So 5,000 minus 1,400, answer is 3,600. Which side is bigger? The balance is 5,000. Which side is bigger? The balance is 1,400. Right? This is how we record our transaction in journal entries and post it into ledger. Let's see the answer here. Right? So how much does the business owe? 3,600. How much? Okay, so let's start our learning at objective 6, which is construct and use trial balance. So what is trial balance? A trial balance is they list all the accounts with their balances, right? So this procedure, or this statement, it's not a statement. The trial balance account is basically made after we post in our ledger. It means recording and posting to a ledger already done. We just balance it out, and the balance are written in trial balance. The name is trial balance, right? So in which assets are listed first, and then liabilities, and then equities. It means we are following some kind of order. First we write down the assets, and then liabilities, and then on its equity. So at the end, we show that debit account equals credit account. Why? Because this the name is trial balance, in which we trial our debits with credits. So it is usually printed at the end of the period, and it helps you to make the financial statement. So analyzing the accounts, so you can often tell what a company did by analyzing its account. So this is a powerful tool for the managers who knows the accounting. For example, if you know the beginning and ending balances of the cash, right? You know that beginning and ending balance of the cash. So you can also compute the total receipts or total payments. So if we are talking about the cash, the debit side is basically increased side, it means business receive cash. So this is cash collection side, right? Credit side, in which cash is decreased, it means this is credit side. Credit side means cash is decreased. How cash is decreased? When you pay cash, which means this is the payment side, right? If you know the beginning balance and ending balance, can you find out the payment here? How much is the payment, right? So I just want you to pause the video where this 1800 and 3000 came from. It's written in the information here. All you need to do, how we balance our the ledger account, the switch side is greater is written here. It means this side is greater by 3000. So this is 9000 here, and 3000 is greater, it means this side is 6000. So payments total worth of 6000 there, right? So that's why the debit side is 3000 greater than the credit side. It means cash, we have cash how much? 3000. So let's see the answer, right? Here it is.